This is the Phoenix Blue Morning Update for Wednesday the 19th of April, brought to you this morning by Tom Colley. When I spoke to you yesterday morning, we were looking forward to a very quiet day. We were coming off the back of a 4-day weekend with the bank holiday on Good Friday and Easter Monday. We really didn't expect much from the markets, and how wrong we were. We had a shock announcement of a snap UK election announced by Prime Minister May, which put a whole different perspective on the day. The actual events, how did that happen? Well, about 10 o'clock yesterday morning, there was an announcement that the Prime Minister would speak from Downing Street. The press were anticipating, they either had inside information or it was good guesswork, that she would be announcing a snap election. She came out at 11:05, having said that she would come out and talk at 11:15, and very simply stated that there was going to be a snap election in June. Why did she call the election? Well, potentially you could see it as an opportunist move. The other parties are in a weak position at this moment in time, particularly the Labour Party. She potentially sees it as an opportunity to increase her majority in Parliament, or the Conservative majority in Parliament. That will make the Brexit negotiations and the passing of the legislation relating to it easier to get through Parliament. It will also allow her to put to one side and forget about the 2015 Conservative election manifesto and the previous Prime Minister David Cameron, giving her authority as the elected Prime Minister. Although we in the UK we don't elect a Prime Minister, we effectively do as the head of the party that wins the election. Another area that she may benefit from is that as part of the UK election, naturally people in Scotland will vote. The results from Scotland in isolation could be used if it goes the way that you'd want it to go, and we see a reduction in the vote for the Scottish Independence Party. We could potentially see that as a reason for her to put to bed any ideas of another Scottish independence referendum. Obviously, if that was to go the other way, then she's somewhat going to have no choice, because she is to some extent putting that back out to the Scottish electorate. Aside from that, we didn't really have a great deal of news yesterday. We had building permits from the States coming out roughly on forecast. We had the dairy price index on the Kiwi coming in ahead of the previous. Looking forward today, we've got crude oil inventories. We've already had information to suggest that the US is producing more oil from its fracking type operations. There's an increase in the number of rigs operating and their production there. So we could see that reflected here. Both those, if we did see that, we'll see a downward pressure on crude. And also, obviously, if you're looking to trade the Canadian dollar, that's one you want to be aware of. Then overnight, European time, we've got New Zealand's CPI due out. So over to the charts. Well, there's the pound chart. The size of that bar is really, really significant. One of the reasons that could be so big is we were talking about a lack of liquidity yesterday. This was a purely impulse move, so professional traders would not have been part of this trade at the outset. They had no idea this event was going to happen. If they were long the pound at that point in time for another reason and they benefited from it, that's all well and good, but it wasn't something that was predictable. As I said, the size of the move was potentially exaggerated by a lack of liquidity, and then towards the end of the day we had a 1 minute bar of over 100 pips, which if you don't believe in stop hunts, have a look at that 1 minute chart. That was very, very clearly a stop hunt. Again, exaggerated probably by a lack of liquidity. Why did we get the bullish move on the dollar with the announcement of the election? It's about certainty. Markets don't like uncertainty. Ever since Brexit vote, there has been uncertainty. The strength of the government's majority is limited. I'm sure the markets, like the press and everybody else, expects the Conservatives to be and Prime Minister May to be re-elected with a bigger majority. I'll say that with a word of caution because we've seen Brexit itself, we've seen Donald Trump, etc., etc. But there appears to be an element of certainty in that it will allow the government to do the things it wants more easily. And as I said, it may remove the uncertainty of a potential Scottish referendum. So all those reasons combined is why we're getting that bullish move there. We'd had uncertainty. We discussed this in a different area on the dollar index last week. But if we're in a triangle, we have uncertainty. Price is consolidating within an ever tighter range until the point it breaks out, and it's some element of certainty, be it good news or bad news, that will drive the market in one direction. That's what the market likes. So we've had a big move there. We'll wait to see what happens today. At this moment in time, I haven't found any intraday levels that I'd be comfortable looking for a pullback to take that market longer. It has tested a significant level here, when that's the spike, the 100 pip spike through on that 1 minute bar. That would have taken out a lot of traders looking to short the market at that point. So a very volatile day in that market as it transpired. How did that affect the other markets? Well, the move was so big on the pound that it did have a significant move impact on the dollar index. We normally always talk about how the dollar's got the biggest weighting, but the size of the move, particularly initially on the pound, was such that it overcame the differential in the weighting of between the euro and the pound, and was certainly the driving force on this dollar weakness through here. We've broken below this very significant and level around $100 here. That's the point of control of that triangle there. Next key level is $99. Any break below that will be even more significant in terms of a bearish position on the dollar. This month is seasonally bearish for the dollar. So there are a number of arguments why you might expect that to happen. Some relief on that bearish move may have come on the news that despite what was previously said, the US Navy carrier and its associated ships is not in fact heading for the Korean Peninsula. It is actually heading out into the Indian Ocean, where it was always intended to go. So potentially we had either a tactical move with misinformation there, or incompetence on the part of the Trump administration. I don't know which. The former would be the intention to apply some pressure to North Korea and its leader. But there is also more positive news and political news in that respect, is that the Americans continue to talk about their relationship with China and how they'll be using China's relationship with North Korea as the only major power with a relationship, and maybe some leverage in terms of negotiating with them. So we could see some relief on the risk-off scenario. We've seen sell-offs on the stock markets, and we've seen a recent rise in gold and the strength of the yen, all reflecting political concerns and uncertainties. Over on the yen, we saw a bearish move yesterday. That move wasn't of the dimension that you've seen on the pound, or you'll see in a moment on the euro, because the move for the pound and the euro were generated for the same reason. They were reflected on the dollar index. So the European currencies had a much bigger influence on the dollar index yesterday than the yen, for instance. Over on the euro, well, we've clearly had a bullish bar yesterday. We're coming through to test a significant level through here. Through the day, I'll be looking for pullbacks to intraday levels to take this further to the long side. We do have this long-term downward trend line. We have a COT extreme short signal here. That signal predates the news we got yesterday. So it will be very interesting at the weekend to see if that signal still remains, or whether the commercial parties in the futures market have changed their position relative to the euro in the light of UK election and continuing dollar weakness. Okay guys, that's it for today. Just to say, potentially still a lack of liquidity in the market following the bank holiday. We did see some big moves yesterday, but that lack of liquidity could have been the reason why some of those were big moves. So we're still looking to push ahead with caution and sticking to our plans. Okay, thank you for listening, and we'll speak to you again in the morning. Take care.